You on this theme of volatility, because my next guest says high-frequency traders are making a ton of money at your expense. Paul Schatz is back with me now. So, Paul, based on what you saw this week, and you and I spoke earlier this week, do you think there is foul play in the equity markets? Is it rigged?
I hate to use the word rigged. I mean, that goes above and beyond what I think. I think there's clearly an unfair advantage with high-frequency trading. And they will say they are always adding liquidity. When there's an ocean of liquidity, they use a little bit of a garden hose. When there's a desert of liquidity, they're nowhere to be found. Monday morning's trading, there's no other way to argue it. The system was broken. I know the NYSE invoked Rule 48, which for your guests is really not even important to discuss, but
well, it helps. It's supposed to help a more orderly market. And, Paul, I'm also only interrupting you because we just put up this chart. You can't see it, but I want to tell you what's there. It was the Dow in the final hour of trading. That was yesterday. And so our viewers can see really just the valley, for lack of a better term, only to rebound off of that. And it just seems as with a move like that, that high-frequency trading or some sort of aberration in the system can only cause that.
You have to differentiate high-frequency trading, which is putting in millions of trades every second on under 100 shares, from algorithmic trading. I know it's kind of crazy to the average viewer, but one are computers moving tons and tons of money at milliseconds. The other one are just computers moving a lot of money in fewer stocks. Neither one is great. But what we saw yesterday afternoon was a far cry from what we saw Monday. Yesterday afternoon, when the Dow swooned and then rallied, while high-frequency trading certainly could have added to those moves, it wasn't like Monday where you had absolute and utter price dislocations that probably harmed the average individual investor, stopped them out of positions. You had ETFs down 30, 40, 50% in a minute and then rallied 80% 9 minutes later. That's a system that you'd find in Africa or Asia or the Middle East in a frontier nation, not here in the capital of capitalism.
Oh, Paul, you're a superstar. And I have never, by the way, heard high-frequency trading and algorithmic trading described so succinctly and so accurately. Thanks for the efficiency. We love having you with us. Paul Schatz.
Thank you.
With us there. One-third world country.